Welcome to Earnings Central. In this video, we'll break down Byrna Technology's second quarter fiscal 2025 earnings. We'll cover key financial performance metrics and dig into insights from the earnings call. All right, let's go. Starting with top-line revenue, the original estimate for Q2 was $28.16 million. The company actually reported revenue of $28.5 million, surpassing expectations by 1.2%. This quarterly revenue also marked a significant 40.6% increase compared to the $20.27 million reported in the same quarter last year. Moving to adjusted earnings per share, the original estimate for Q2 was 8 cents. The company actually reported an EPS of 10 cents, crushing expectations by 25%. This result also reflects an 11.1% increase compared to the 9 cents per share reported in the same quarter last year. Now, let's dive into some additional performance metrics highlighted during the earnings call. Starting with profitability, Byrna maintained its impressive gross profit margin of 62% in Q2, matching the same level from the prior year. This is particularly noteworthy because the company launched their new compact launcher during the quarter, which could have disrupted margins. Instead, the favorable product mix from the CL launch actually helped offset any potential margin pressure from increased dealer sales. This consistency in gross margins demonstrates the company's pricing power and operational efficiency. Moving to operational profitability, Byrna's adjusted EBITDA surged 54% year-over-year to $4.3 million, up from $2.8 million in Q2 2024. This significant improvement shows the company's ability to scale efficiently while managing costs. The growth in adjusted EBITDA outpaced even their strong revenue growth, indicating operational leverage is working in their favor. Now, here's where things get interesting from a cash flow perspective. Byrna's cash and marketable securities dropped substantially from $25.7 million to $13 million during the quarter. This wasn't due to operational losses, but rather strategic inventory building ahead of their compact launcher release. Management planned this cash deployment to support growth initiatives. Speaking of inventory, this metric tells the growth story. Inventory jumped 62% to $32.3 million from $20 million at the end of fiscal 2024. This massive buildup was intentional, preparing for the CL launch and anticipated demand. The company has since reduced production from 24,000 units monthly to a steady state of 15,000 units, suggesting they're now working down this inventory level. International expansion is clearly paying dividends. International sales grew an impressive 86% year-over-year to $2.6 million, including a one-time royalty bump from their Latin American partners. This growth demonstrates Byrna's global market potential and the success of their licensing model in South America. Finally, Byrna maintains a completely debt-free balance sheet. This financial flexibility is crucial for a growing company, allowing them to invest in growth initiatives without the burden of interest payments or debt covenants. It's a strong position that gives them options as they scale. Now, let's shift focus to some of the key insights and takeaways from the earnings call. The star of the show was definitely the compact launcher introduction in May. This new product helped drive record quarterly revenue of $28.5 million, representing 41% year-over-year growth. What's particularly impressive is that this growth happened despite slower consumer spending overall, and a deliberate sales slowdown in April as customers waited for the CL launch. The CL is 38% smaller and 3% lighter than their SD model, while maintaining the same power as their most powerful launcher. The Sportsman's Warehouse partnership is off to a strong start, contributing $2.4 million of the $3.9 million increase in dealer sales. They now have Byrna products in 59 Sportsman's locations with various formats, from full store-within-a-store setups with shooting pods to point-of-sale displays. The plan is to expand to approximately 140 locations by year-end. What's encouraging is that even locations with just point-of-sale displays are performing well, sometimes outperforming full store-within-a-store locations. A major development was getting the compact launcher onto Amazon as of May 27th. This is significant because Amazon has been growing faster than Byrna's direct-to-consumer website. The CL was included in Amazon's Prime Day sales event, which should drive visibility and sales. Management notes that while Amazon takes a 15% fee, their net margins aren't much different due to lower credit card fees, no Shopify fees, and reduced advertising costs. Looking ahead, Byrna is launching Byrna Care next month, their first recurring revenue product. This insurance-like program will replace lost, stolen, or damaged launchers with no questions asked for a monthly fee. But the bigger opportunity comes next year when they plan to install chipsets in the CL that can contact authorities automatically when used in self-defense, potentially creating a $5 to $10 monthly recurring revenue stream. The marketing strategy is evolving with celebrity endorsements. They recently added Tucker Carlson to their roster alongside Sean Hannity, targeting conservative audiences. But they're also in discussions with celebrity endorsers who can reach much broader demographics. This expansion beyond their traditional customer base could significantly increase market penetration. Finally, Byrna is leveraging AI to revolutionize their content production. They created a highly effective banana commercial entirely using AI programs, producing a 30-second commercial in hours at essentially no cost, something that would have previously taken months and cost hundreds of thousands of dollars. This AI-driven approach is helping them scale content production and increase advertising frequency across platforms. That wraps up our recap of Byrna Technology's second quarter fiscal 2025 earnings. If you found this recap helpful and want to stay on top of more earnings reports from other companies, don't forget to subscribe. We've got plenty more quick and easy breakdowns coming your way from Earnings Central.